NVIDIA just lost $30 billion in a single trading day. That's not a typo, not a glitch. That's real money evaporating from the market because of one thing. Geopolitics and tariffs just collided with the AI bubble, and the impact is catastrophic. We're talking about the world's most dominant AI chip maker, the company that literally powers the generative AI revolution, getting absolutely blindsided by a policy decision that no amount of engineering can fix. Welcome back to TechMeHome MarketPhase Daily News. Today is Wednesday, May 20th, 2026, and the cracks in AI's foundation are showing. Let's break down exactly what happened and why this matters for your portfolio. Here's the story. Trump's 25% tariff on China-bound semiconductors just became real, and Beijing, not surprisingly, responded with the nuclear option. They rejected NVIDIA's latest flagship offering, the H200 processor. Think about that for a second. The company that controls 80% of the AI accelerator market just lost access to their second largest revenue stream. China is absolutely massive for NVIDIA. And now, that revenue is gone. The tariff made the H200 so expensive for Chinese customers that they said no thanks. They'll source somewhere else or develop their own. Either way, NVIDIA loses. Here's an ELI5 so you actually understand what's happening. Imagine you're running a lemonade stand. You've got the best lemonade in the neighborhood. Everyone wants it. Your biggest customer is the cafe on the corner. They buy half your supply. But then, the government says, every lemonade sold to that cafe gets a 25% tax. Now your lemonade costs way more. The cafe says, thanks, but I'll find another supplier. You just lost half your business overnight. That's NVIDIA right now. The tariff didn't change how good their chips are. It just made them economically unviable for one of the world's largest markets. And that's the real story the market is reacting to. By the way, if you're holding tech stocks right now, you need to think seriously about portfolio protection. Our partners at MarketGuard offer real-time alerts when volatility spikes. You're not going to catch every sell-off, but you can get ahead of the next one. Link in the description. Protect yourself, seriously. But here's where it gets darker. The China tariff is just the headline. The real story is much bigger, and it's been brewing under the surface for months. Wall Street is finally asking the question that nobody wants to hear. Can we actually sustain this level of AI infrastructure spending? Let's be honest. We've been living in an AI Capex fantasy. Every quarter, every major tech company, Meta, Google, Microsoft, OpenAI, they're spending billions and billions on data centers, GPU clusters, infrastructure. We're talking hundreds of billions of dollars a year. And for what? The returns aren't there yet. AI hasn't been monetized. It's possible that it will be someday. But right now, companies are literally printing money into silicon and hoping it eventually produces value. It's like the dot-com era, but with 10 gigabyte data centers instead of websites that sell nothing. NVIDIA's tariff hit just made investors wake up and ask the hard question. What if this spending level isn't sustainable? What if demand is going to slow? What if China finds alternatives? What if the entire AI Capex thesis is just wrong? And when one person on Wall Street asks that question, they all start asking it. That's contagion. That's how a $30 billion hit happens in a single day. Now, let's talk about what else happened today. Markets finished mixed overall. Bonds retreated, crude retreated, so growth stocks actually got some relief. But the tension underneath is real. You've got AI infrastructure sustainability questions crashing into massive M&A activity. Speaking of which, NextEra just announced they're buying Dominion Energy in the largest utility deal ever. This is interesting because it shows confidence in energy transition and renewable infrastructure. But it also shows that utilities are facing massive grid modernization costs. The consolidation game is heating up because smaller players can't afford the transition alone. Watch regulatory approval timelines here. This deal could reshape utility sector valuations for the next decade. Then you've got Bill Ackman, literal billionaire activist investor, adding to his Microsoft position. This is the opposite move from the broader market skepticism. Ackman's saying, I believe in MSFT's AI strategy more than the herd does. That's a contrarian signal that could attract institutional money when insiders move big, smart money watches. And finally, LVMH, the luxury conglomerate, just reported that Q1 earnings got hit by Middle East conflict. This tells you something important. Geopolitical fragmentation is creating completely divergent consumer spending patterns. Some regions are booming, others are collapsing. This is the new normal is also a warning sign for discretionary sectors heading into the second half of 2026. If luxury is struggling, regular consumer spending is probably next. So what does all of this mean for you? First, NVIDIA is not dead. The company is still dominant, but geopolitical risk is now a permanent part of semiconductor valuations. You can't ignore it anymore. Second, the AI Capex question is no longer theoretical. Wall Street is pricing in slower spending. That affects every tech stock. Third, consolidation and defensive moves, like the NextEra Dominion deal and Ackman on Microsoft, suggest smart money is hedging. You should too. Fourth, geopolitical fragmentation is here to stay. Tariffs, conflicts, sanctions. Your portfolio needs to account for a world where global supply chains are weapons. The stock market finished mixed today because the good news, bond yields retreating, crude retreating, got offset by the bad news. AI's growth narrative just cracked. That crack is going to get bigger. Watch the next earnings season. If tech companies downgrade AI spending guidance, we're going to see selling pressure that makes today look like a warm-up. But here's the thing. Sell-offs are buying opportunities if you know what you're buying. The market's volatility right now is pricing in fear. Fear creates mispricing, and mispricing creates wealth for people who can stay calm when everyone else is panicking. That's what we're tracking here at TechMeHome. Not just the headlines, but the signals underneath the headlines, the tariffs, the consolidation, the insider moves, the geopolitical fractures. That's where the real trading opportunities live. None of this is financial advice, purely for entertainment and education. Always do your own research. Consult a financial advisor before making any investment decisions. Rates, regulations, and reality can change faster than YouTube videos. Stay sharp, stay informed, and we'll see you tomorrow for more MarketPhase daily news. Thanks for watching.